Alright guys, how are you all? I hope you're as excited as I am. Guess what the spiders did today? Yesterday, if you watched the video, I said this will be the first level of support. Let me just draw that Fibonacci retrace. So just to recap for those of you that haven't seen yesterday's video, the S&P 500 represented by the SPY here made a major low at the beginning of 2016. And the markets have gone up all the way until the high of last week. I'm going to put on the Fibonacci Retracement tool, which is essentially a ruler, and I'm going to drag it right from that low at the beginning of 2016 all the way to the top of last week, and these are percentage levels of retrace. So the 50% mark here is the halfway mark, the 25% retrace is a quarter of the entire distance, and I said that will be the market's first level of support. Look what it did. Let's look at the daily chart. We open, let's look at the intraday 10-minute chart. We opened down here and it pierced just below the 25% retrace. It pierced it by about 0.5%, and literally within the first minute, let's go back, this is now the 1-minute chart. Look at that. Within the first 2 minutes, it just ricocheted up all the way to the unchanged mark, and then throughout the rest of the day, let's get the 10-minute back on, it went higher. Look at that. This stuff works, guys. Technical analysis works. If you were watching CNBC or Bloomberg, you'd be totally terrified of this mark. You'd be thinking it's going down to zero. You know, turn the news off, watch the charts, and it will tell you everything you need to know. So this level has held, and not only have we got a rally, but if I show you the volume, look at this. This is the highest ever volume since well, it's the highest volume we can see on the daily chart. Look at that. So this bounce back is on greater volume than the sell-off yesterday when the Dow was down, you know, over 1,500 points. So this looks like this is the bottom for now. Now, we don't want to take anything for granted. What we're going to do is cycle through some stocks that are also into support levels, because if you remember from the video yesterday, I said even though the S&P 500 will bounce, we want to see other stocks at significant support levels, and then we combine them. So let's just before we get on to stocks that we're entering, including an oil stock that I entered just before the close today, what I'm going to do is review what we did in terms of the trades that we closed. So let's go to DLR, which is this property digital realty trust in the real estate sector. So yesterday, you know, the Dow was down 1,500 points, and we got this nice red bar. And when I saw this thing start to turn around, I said, well, hang on a second. If the Dow was down significantly, and the S&P 500 as well, I mean, let's go back to the SPY. We got a big, you know, red bar. That's a significant downside. If this DLR can't even, you know, make significant new lows, it's very telling that as soon as this market bounces, this thing will start heading higher, and it's not going to go any lower. And so, you know, within the first 15 minutes or so, I said, hang on a second, something's not right here. This chart is telling me that DLR should be experiencing much more significant downside, but that is not happening. So what do? You analyze it, you say, hold on, this is not working, grab the profit I've got. It's you know, just not working out, grab the profit I've got, and just walk away and find another trade. And that's what we did. So you know, we didn't get out at the bottom, so what? The market gave me money. Let me show you. Let's go to the track record. Let's see here on DLR. The market gave me on DLR a 33% profit. The trade failed as far as I'm concerned, but I still made 33% profit in the space of 1 week. So, you know, when you're trading at a high level, you know, when things don't work out, you're still walking away with profit. Now, in my earlier days, just to sort of take you back, when I was new and considerably less experienced, I would say, no, this chart is bearish, it's going down, and I'd be just sitting there waiting, and I wouldn't be able to accept that this thing is not working out, it's not giving me a massive, spectacular profit, and I would sit there and wait like a dead duck, and this thing would just suddenly go higher, and I would end up taking a loss. Again, read what the charts are doing. The Dow was down 1,500 points yesterday, and this thing couldn't even break significant lows. I mean, we made a low at the open again within the first 10 minutes, and it came straight back up. Once I saw that, I said, if this market continues bouncing, you know, and this thing can't even make you know, a significant red bar on the chart when the Dow is down so much, this thing ain't going south. Just grab the money and run. Similar thing on SRE. This is a utility stock. Again, yesterday, look at this bar. The SPY had a really big down day. This thing couldn't even make new lows. It made a new low at the open this morning, again, but I wasn't quick enough, and as soon as it started turning back up, I just grabbed it. So again, I didn't get a good price. The trade failed as far as I'm concerned, but look, I still walked away with 16% profit. A profit is a profit. Right? Learn to read the chart and it will tell you everything you need to know. So those were the trades that I closed, again for minimal profit. You know, sometimes doesn't work out, just move on. Then I entered AAOI. Now I entered this on the short side, notwithstanding the fact that the Dow was down significantly yesterday. This thing is a very bearish chart, and it's just not ready. It needs a bit more time before it will go down further. Now we had a very big bounce. Let's go back to the SPY. We had a very big bounce on massive volume, as we've said. However, AAOI, just although it's up 2.89% on the chart, it's merely a speck. It's a speck of green. This thing is still heading lower, and I still want, you know, exposure to the downside, because if that Dow and the SPY starts to turn downwards, which it may well do to come and test the low in a week or two's time, perhaps maybe further down the line, you know, I still want some exposure to the downside. Notwithstanding any of that, this thing is bearish. It's similar to our GoPro trade from back in January. You know, we're stuck below the 20 moving average, and you normally get one massive drop like that. So let's just go back. AAOI, you can see here, you know, there's plenty of downside to come, and there is a target I've got here. Around here, there's gap fill. So I'm expecting this thing to get down to the 25 level again from yesterday's video. You'll learn what gaps are when price subsequently comes down to this level here. That is a level of support, so that should be and could be a good target for this stock. It's a semiconductor. Again, it's moving completely independently of what the main markets are doing. It's in a downtrend. Look at the weekly chart, steeply declining 20 moving average. It's going downtown. Okay, what else? Okay, so yesterday I said the day before I closed quite a few positions to raise some cash. I took minimal losses on them, and this is what we want it for. Look at this trade. TRP, it's an oil stock. Before we look at that, let's look at what oil did. USO, ETF that tracks crude oil. Look at this. Again, barely a red mark on the chart. This thing did not come down with the market route, you know, yesterday. So this is showing a lot of strength. Now, even if it pulls back, look at this oil stock. This oil stock is into major support. It made a major low in 2016 when oil bottomed, and we are still in the upper ranges of the chart. You know, in the last 3 weeks, yes, it's fallen around 13% or so. Actually, it's gone down around 18%. But look, this is a major level of support on the weekly chart. And remember, stocks will follow what the SPY does and the Dow Jones does. It won't necessarily follow what crude oil does. So, you know, the fact is the markets came down. This has come into a major support. So this pivot is a major level of support. And this is a flush and blast off play, because look, we let me just put the line in at the low here, and you can see on the daily chart we pierced it intraday, and I think probably within the first 10 minutes, look, whoosh, look what the institutions did. They took this stock back up. They flushed it down here for literally, let's look at the 1 minute chart. Right, they flushed it through that level, through this low here, for all of 1, 2, 3, 4, 5, not even 10 minutes, and they took it back up. And they did this on a lot of stocks. Why? To flush out the amateurs, because an amateur that's in this would say, oh, you know, they would have bought up here right at the highs and say, oh, let's put our stop there. They flush it low, trigger the stops, and then they pick up the shares. And that all happened within the first 10 minutes, and they've, you know, whipped that stock higher. Let's see if it's on volume. It's on good volume as well. Look at that, 2.6 million shares, higher than a volume we've seen since June last year. And interestingly enough, that was when TRP also started to make headway north. So we're into this support level here. Let's look at the monthly chart, because although we've got this now 20 moving average declining downwards, let's look at the monthly chart, because we're so extended from this, we are oversold. We want to see what's going on a monthly chart basis. So what's this thing doing? Look at this. Let me get rid of all of these lines. Okay, the 20 moving average on the monthly chart has been pointing upwards. It's now started to level off, but the fact is we're still pointing upwards. Okay, it started to taper off. We're into a major level of support, and given that the S&P 500 has hit a major bottom, the fact is this stock is into a solid level of support. We got the flush and blast off play. We have a bottoming tail. This looks like a hammer or a chisel. So I'm expecting this now in the coming days and weeks to make its way up to around the 47 or 48 level. In addition, let's see if we have a Fibonacci retrace level. Again, I'm going to bring the ruler out from that major low in 2016, and I'm going to drag it up all the way to the peak. Look at that. We've hit not the 25% retrace that was done here where it got a bounce, but it's now hit the second level of support, that 38.2% retrace level. That is the second Fibonacci level. So that is another major factor for the trade. Now let me see if there is another factor for the trade. So let's look at the daily chart on the left hand side. I'm going to widen the scale back to this pivot low, which coincides with this. Let's put the right side back to the weekly. Okay, we've got these pivot lows here, and we've also pierced that 200 moving average, so we are oversold. Now let's see if there is something of interest to us. I'm going to put a line in at the low that we made earlier this morning, and I'm going to go back here. Okay, look at this. The pivot lows here from back in November. This is a gap. It's not one of the easy gaps to spot, but basically on this particular day, which was a Monday, the price closed here at 43.20. The next day, on the Tuesday, it opened up here. This creates a gap. Now again, if you've watched tutorial 1, you will learn about these gaps, which are not so easy to spot. However, we know what we're doing, and we spot them a mile off. So this is a gap fill. Let me put the line in to show you. This gap is created here, there, and look, the price has come down and it's now filled the gap. Look at that. Yesterday it filled the gap, it pierced it, it went to the low of this morning and closed back above, and we've now closed basically almost back above the gap or just on it. So again, that is another factor for this trade, and this trade should play out to the upside pretty quickly. Now, stock traders can buy this tomorrow at the open. If you get any retrace back down here, you'll get a very good entry. I'm expecting in the coming days and weeks this thing in relatively quick order should get up to the $47 or $48 level. Okay, so in terms of what option I'm getting, or what option I've got, let's just go back to the open position. Where are we? Trade alerts page. Okay, so the high risk play, I've got two options for this. I got the March 45. It's only around a month away or so, and I got that at a price of 75 cents. So 45 is the strike price. Again, stock traders, you can buy this tomorrow and you can expect 7, 8, 9, 10% upside. Those are the trading stocks. I got the 45 strike, so we're down here, so it's a slightly higher risk trade. And for this trade to break even, we need to be above 45.75 before the March expiry, the third Friday in March, which I believe is the 16th. Now, if we do get up to 47, so this will be our, let's say, initial target price. The value of the option, if we get up to 47, will be at least the difference between 47, our target price, and the strike. That's $2, and we bought it today for 75 cents. So we're aiming for a 3 times return on that more speculative play. Now for our longer term play, we've got the May expiry, so that one we are going to be holding for a longer term. So we've still got the 45 strike. Let me just see what price I paid. $1.19 for the May expiry. So assuming we get up to the 48 or 49, let's say 49 level before May, which is bags of time, again the options will be worth $4 and we paid $1.19. So you can see we're aiming for 3.5 times return, if not more. Again, we've got to play it take it one day at a time, but I'm giving this trade plenty of time, certainly on that main position. For the high risk position, again, I'm using a smaller position. Again, my aim is not to make pots of money left, right and center and take risk. My aim is to be consistent and to control risk. So okay, now what else I'm going to do is just review a couple of other trades that we are already in. Let me just cycle through and see if there's anything worth bringing to your attention. Okay, AOBC, we're still in this on the short side. We got to the sort of 10:30 area, we filled the gap. I think tomorrow I probably will close. I'm hoping it will turn down. Really, I should have grabbed it earlier today at the low. However, you know, I just want some exposure still on the short side. So, you know, just keep an eye and we'll see what to do. This thing is still heavily bearish, but we're just going to wait and see what happens tomorrow. SQ, which we're in, you know, bounced back nicely. Look at this, the support has held. We haven't even touched that 20 moving average. This thing in quick order should start to move higher. If you guys are not in it and you're trading the stock, you know, you can buy it here for a bounce in the coming days. Maybe, you know, you maybe get it a 10% bounce or so. Let's see what else. CRCM, we're also in. Again, look, this pivot low has held. They took it below. Flash and blast off play. Look at tutorial 4 in the member section, and they're going to take this higher. This is the time. EEP, you know, very similar thing here. They've taken it higher. This is the time where you want to put money to work. This is the opportunity you'll have to buy in at the end of a correction and at the lows. You know, by reading the charts, you know exactly when you can buy a market. So S&P, you know, look at this, a big green bar and a massive volume. Now that does not mean to say we're not going to come back down again. We may well do so. So we're looking at opportunities in stocks all the time. You know, because stocks that bottom, you know, even if I go back to TRP, this thing isn't necessarily going to just shoot up in 2 days. It would be nice if it would, but I can't say that for sure. It may do something like this. Let's look at KMI. KMI bottomed in November, and it took how many days before it really started to take off? It took 22 days. If you see the box on the left-hand side, 22 days it took to bottom. So with TRP, you know, you've got to give these trades time, and you have to be patient. Right, let me look through this. Anything else? AAL, I already mentioned this. MU, look at this. Michael mentioned this earlier on the Facebook group page. Look at this, a beautiful move, 11.3%. How did I know not to close this yesterday? Reason being is we're into this pivot low. You've got to look at weekly charts. This is a pivot low here. It's a strong level of support. Yes, we've come down below the 20 moving average on the weekly chart, but the 20 moving average is still moving higher and quite steeply so, which means the uptrend is still intact. This is all bullish consolidation. Now that we've had this correction and we've sort of wiped out the weaker hands, this thing is now free to go higher, and I'm hoping and I'm anticipating that in quick order this thing should start to get up to the $49 level. After a correction, after the weak hands have been wiped out, you know, things will start to move up very, very quickly. You've really got to be on the ball. Now what I want to do is look at some other stocks as well. In fact, let me move this to the right so you can see which stocks I'm looking at. I've got a short list here. I've got my buy now list. You know, I've got various lists of stocks, and I narrow it down so that at any one time I've got 10, 20 or 30 stocks that I look at that I know, right, I may want to buy this now. Let me see what it's doing. So what I'm going to do is take you through that. Now, Michael, you mentioned Fossil. I saw this actually yesterday on this trend line. Look at that. We got a low in November, a higher low in December, and now we came down. So yesterday we came down. I said, wow, this thing is into support. I was anticipating or hoping to actually get into it. However, what put me off is the fact that the 20 moving average, it's sort of leveled off, but it's going sideways. I would have perhaps preferred it to be more steeply to the upside. However, I think it is a good buy. I think this will be a low for the next certainly month or so, if not longer. We've got a beautiful reversal, 11%. Let me see the volume on that. Okay, the volume's nothing to write home about, but okay, that's a good turnaround. I would not buy it up here. Wait for this thing to pull back. Now what we'll get, you'll see on the other stocks I'm going to show you, if you get sideways consolidation, then you can buy it for a bigger move higher. But this thing has just gone up 11%. Be patient, don't chase anything. So let's go through this list that I've got. INFN, look at this. Now, traditional theoretical technical analysis would say this is bearish, you've got a downward, sideways consolidation. You know, don't read the books, don't look at the technical analysis books, just read what the charts are telling you. It was a fake out this morning, they whipped it up, look at that, on, you know, pretty good volume. And now, would I buy this here? Absolutely not. What I want to see happen is a bit of sideways consolidation. I want small candle formations building up gently over the moving averages, and then this thing will build pressure to go higher. I'd also prefer this thing to break above the descending 20 moving average. It might take another couple of weeks or so, but I'll be looking at this regularly. But this is the kind of thing I'm looking for, and this is the kind of thing, you know, if you want to excel in this game, you've got to get you know, used to identifying chart setups and waiting for the right moment to jump aboard. It's very tempting, you know, when you see something like this, oh look, wow, it's up 9%, I must jump on board immediately, otherwise I'll miss an opportunity. That will get you into trouble, because you'll buy it right at the top here, the thing will pull back, you'll think, you know, I'm in loss, I've put too much in, oh my goodness, it's going down again, and it will just mess up not only your trading but your psychology as well. So be patient. There are 5,000 stocks out there. You will always have an opportunity to trade something 90% of the time. So, you know, be patient. Let the trade come to you. Right, LCRX. Again, look at this. It hit the 50 moving average on the weekly chart. We've got a steeply rising moving average. It hit it literally to the penny. Let's see, is there any other level of support? Look, a gap fill here as well. Can you see? This is one of these obscure gap fills. Price closed here at the low on Tuesday, 26th of September. The next morning it opened up here on the Wednesday. That is a gap. So, you know, 175.05 is where the gap window was, and the gap fill is 169.70. Look at this, 169.70 is about here. Pierce the gap fill, that's a level of support. Plus you've got that rising weekly 50 moving average. Boom, this thing's gone higher. Now, this is something I would have wanted to get into, but I only spotted this towards the end of the day. I cannot buy it at the top here. What I want is another few days consolidation, give me tightly forming candles above the moving average or going sideways, and then we can jump on board. But this is in my watch list now. Okay, Netflix. Look at this. What I like about this, again, the Dow yesterday was down 1,500 points, and this thing is it barely moved down. You know, you can't even see it on the chart. Now, what do I like about this? The fact that we've come down and we bounced off that 20 moving average. Let me take you back to AAOI. The fact that the 20 moving average is pointing downwards and we cannot get above it is telling us that this stock will be going down. It works the same way in the other direction. You've got the 20 moving average steeply rising and the stock cannot get below it. Give me a day or two and I'm going to jump on board Netflix. This thing is going to shoot higher. You know, I can just see it. This is what chart reading is all about. This is what trading is all about. Doing what the charts are telling you. Okay, but again, I can't buy it here just yet because it's risen from where it opened. You know, it's risen 7%. I can't do it. I need the 20 moving average to rise a bit more, and I need a few more candles sideways. Give me tightly forming candles, and I'm in. Okay, GLNG, another. Okay, so we hit the 20 moving average on the weekly chart. That's a level of support. I don't think I'll enter this trade. There's not enough strong enough signal for me. But again, you can see a lot of stocks are into support. So when I said I want to see the SPY bottom and give me a signal, I want to see it on other stocks as well. And a lot of stocks are into major support levels. Again, I'm just cycling through. Look at this. Now, a lot of people would say, a lot of the amateurs and even some professionals will say, ooh, look, descending 50 moving average. Well, you know what? I don't care. The Dow was down so much yesterday and this thing couldn't even go down. You're telling me that I shouldn't buy this? I'm going to be buying this in the next few days. I want it to pop above the moving averages, which it has done. This thing may start to turn higher, and so will the 20 moving average. Again, give me 2 or 3 small candles, and I'm jumping on board because this thing is going up to the 20 level and beyond. So again, this is what trading is all about, looking through stocks. Look at this, Roku. we have a flush and blast off play here. This was a major low earlier in January. Again, the Dow was down majorly yesterday. This thing didn't give a damn. And look, it gapped down. Let me give you the low. The low here was 39.1. That's this candle here. What was the low here today? 39.01. So this thing pierced the low by 10 cents. It knocked out the stops at the open, and boom, they shot it up. This thing is in an uptrend. Now, the stock Roku has not been going long enough. We haven't been going for 20 weeks, so we don't even have a 20 moving average yet formed. Let me see how many weeks we've got on the stock. The stock's only been going for 19 weeks. Look at where it says in the middle, 19 bars in that box. So next week we will get a 20 moving average. However, there is a toolkit that I have in my kit bag called the VWAP. I haven't done a tutorial on it yet. I just haven't had time because we're so busy trading. But basically, you'll learn from these videos. The VWAP is a volume weighted average price. So it's in a sense a moving average, but it's weighted towards volume as well. So for example, if a lot of volume was traded in a certain area, it will skew that VWAP or the moving average, showing you where a lot of the actual money in dollar amounts went into a stock. And that sort of gives you an indication as to where the money has been going. Now basically how VWAP works is I'm measuring it from the inception of the stock back in October. And the fact is, we've stayed above VWAP, we've come down again with the Dow down big yesterday. This thing couldn't even get below VWAP. Plus, we've got a flush and blast off setup. This thing is going high. Give me another day or two. In fact, I may even jump on board this thing tomorrow. Keep a lookout on the Facebook page and the trade alerts page. But again, this thing will be going higher. Let's see if we've got a fib retrace as well. I'm measuring from the all-time low. Yeah, nothing there. We're at the 50% retrace, which is down here. Okay, but that's not telling us anything. Again, this is what you've got to get used to doing. ETP, nothing really to talk about there. We came down, we're into the 50 moving average. This thing should be going high. Again, I want to see it go sideways for a few more days. NEMATX. Look at this. Again, what does this do? This is a shipping stock. So I'm going to wait now. We got the 20 moving average moving high. This thing gapped up last week and it's come down, but again it's getting bought up, so it's not getting anywhere near that 20 moving average, which is rising very steeply. Give me another few days of sideways consolidation, give me tightly forming candles, and boom, this thing will be going higher. So we've got a lot of things to get into. Look at this global X Lithium. I think this ETF tracks nothing in that list. This thing tracks lithium companies, that make batteries for cell phones and all sorts of other electronic things. Look at this. We're into the 50 moving average on the weekly chart. We've pierced that 25% retrace, and importantly, we have filled the gap. Remember, gaps, when they get filled, are levels of support. We pierced yesterday with the and this morning we pierced that low, and then it turned around. At the end of this week, if this thing proceeds high and we get a bottoming tail on a weekly chart on a big ETF like this, let me show you RSX. Do you remember at the end of last year we bought RSX just based off this weekly bottoming tail at the 50 moving average? Again, at the end of the week, if this thing moves a bit higher and we get a bottoming tail first thing Monday morning, I'm going to be all over this thing for major upside. Remember, all of these things are still in an uptrend. Whatever the Dow and S&P 500 did yesterday, it doesn't matter. Read what the charts are telling you. Turn the news off. Don't worry about all the talking heads, Carl Icahn and whoever else is talking. I don't know what they say. I don't care what they say. I'm not interested. Just show me the chart, because the chart will tell me the truth and nothing but the truth. We just need to know how to read it. Okay, anything else in the list? Facebook, look at this. Right? We couldn't even break below the 50 moving average. Again, we gapped down at the open, we're back up. But again, look at the weekly chart. Rising 20 moving average, we can't even break below it at all. This thing is going higher. Again, give me a couple of days sideways consolidation above that 20 moving average, and boom, I'm going to jump on board. Now is the time when Facebook will be making, new highs. So that's something we want to be aware of. Okay, what else have we got? ALXN, another trade here. Look at this. A major low back in, when was this? May last year. I'm going to draw a trend line and I'm going to join. Well, let's do it on the daily chart. Okay, So we draw a trend line. Now I can do it to there, to the low there. However, when you're looking at candlestick charts, you can actually draw the trend line up to the, let me clarify this for you, up. You can join it up to the low of the body of the candle rather than the tip. Look what we've got. It hit that trend line to the penny this morning. It pierced it by what, 2 or 3 cents, and whoosh, up it goes. This thing's going higher. So the trend line is the first factor. Again, amateurs would be waiting for it to get down here because they don't know that when you draw trend lines, you can pierce the wick and you can draw it up to the body. But again, so the trend line is the first factor. The second factor is we're into gap fill here, although the gap is actually, that gap fill is down here. Anywhere in this range is the gap fill, so that's the second factor. Plus, look at this, Fibonacci retracement. So I'm taking out the ruler from the low in December, whipping it all the way up. So I'm measuring this low to high. 25% retrace is there, 38.2%, 50% is the halfway mark. Again, none of these levels seem to have held. Again, you'll never buy or take a trade based on one factor. You want multiple factors. We've got that trend line already. We've got the gap fill. That's the second factor. The third factor is the last line of defense is the 75% retrace. This is a good setup for ALXN. I'm going to keep it in my watch list. Again, it's up nicely today. Any pullback, or if it goes sideways for a few days, you know, it'll be something good to jump on board, and I would expect this to rise around 7 or 8% initially. Let's see what else is in my short list. MTRM went into this pivot low here. Again, 20 moving average on the weekly chart is rising steeply. The stock is still in an uptrend. Look at this. If by the end of this week we rise a little bit more, we will get a bottoming tail, and again, you can buy this thing first thing Monday morning. HSC, this is a metal stock. We're into this pivot low here. We're into the 50 moving average. So again, you know, all these stocks hit their support levels, and they basically rose. It's nothing to do with the news. It's nothing to do with sentiment. Follow the institutions. You know, it's not you or me at home that are moving these stocks. It's the institutions, and they all read charts, and that's how they determine when to enter a stock. So all of the institutions saw all of these stocks are into levels, and they just bought, and that's what gave us the green bar, and it's working for so many stocks. Look at this. I like this one a lot. SU. I was wanting to get into this today, but again, by the time I saw it, it was late in the day, and this thing was already up. Let it come down or pull back or go sideways for a few days. But look at this. Multiple factors. You've got a gap fill here. Okay. Gap fill from October. We've now come down, fill the gap. First factor. Second factor, rising 200 moving average on the daily chart. That's a level of support. Third factor, right hand side, rising 50 weekly 50 moving average. You know, that's your third factor. Fourth factor is the pivot low itself, notwithstanding the gap fill, but looking at the weekly chart, this is a pivot low here. That's a level of support. Let me get a Fibonacci ruler. Look at that. Fifth factor. I've lost count how many factors we've got, but basically you pierce that 25% retrace, and whoosh, you know, within half an hour, was it? You know, within the first 10 minutes, it closed back above. So this is into a good level of support. This is when stocks will now start to make headway. You know, perhaps we were a bit early on some of the plays we got into 2 weeks ago, but now we've got the pullback, and now is the time really when we want to be buying. This is when stocks will now start to make bigger and sustained moves. SLCA, we're already in this. Again, as I've said in the last couple of days, if you're not in it yet, here's a good point to buy. You've got a rising 20 moving average on the weekly chart. You're into support here. Let's see what else. Tesla, okay, you got a rising 50 moving average, so that should be going high, but I wouldn't take this trade myself. Let me just flick through KEX. Look at this, a shipping stock. Let's go to the monthly chart, rising 20 moving average, and it's just a matter of time before the 50 starts to turn higher. Let's go back to the weekly chart. We're now above that 200 moving average. Look at this, we can't even break below the 20 moving average on the daily chart, and the Dow was down so much yesterday, 1500 points, 4% drop. This thing was up, you know, we had a green bar yesterday. Give me another couple of days, let it go sideways, you know, and this is what it will look like in a few weeks time or a few months time. This thing should start to shoot high, and we look back and say, look, we saw these small candles above the moving average. This is what it looks like. This is what you've got to do. You've got to squash the chart and say, wow, are those candles small relative to everything else? Yes. Are we above the moving averages? Does it make sense that this thing should go higher? Yes. So we're going to look at this in a few days. All of these stocks are in my shortlist, and I look at them multiple times a day. Nothing much to talk about there. UVXY, this is a volatility ETF. I'll talk about this perhaps in a couple of days or so. Okay, I think I'm going to bring the video to an end. Oh, by the way, before I close, Michael on the Facebook group asked me about a stock. Michael, let's take a look at it now. Okay, VGZ. Let's take a look. Right, this is a materials sector gold stock. Okay, so it's a small cap, 85 cents. We're above the moving averages on the daily chart. The weekly chart is about to turn upwards, so that's good. We've got a descending. Yeah, I think this is a reasonably good setup. I don't know if it's the best I've seen, but I don't see why this thing shouldn't go higher. Let's look at the monthly chart. Now, the monthly chart, this 20 moving average has turned downwards. I think we'd need to break above. We've got the 50 that's turning higher. I can see, it does have merit. It's not the best setup I've seen. If you want me to find a gold stock, well, let's quickly do that now. Okay, Newmont. I'm just going to cycle through the gold stocks pretty quickly. I mean, gold overall is in a... See, these charts are bearish. A lot of gold stocks have come in. I don't see them at support. I can't get a read on these gold stocks. There's nothing here that convinces me that says, wow, you've got to buy these gold stocks now. I mean, let's look at the GDX. We've come back in. Is the support here? Probably the support's down there. But if I look at the monthly chart on the GDX, that 20 moving average was in an uptrend. So we were in a longer term uptrend, based on all this big move last year. But we've gone sideways. I can't tell from this when we're going to break out. So the gold miners, I wouldn't... VGC, was it? Yeah, that's the gold. So, looking at this, I mean, it does have its merits. We're above the 20 moving average. Where will this thing go to? If it starts to make a move, perhaps your target would be up here initially. But yeah, those are my thoughts. It does have merits, but it's not the best chart I've ever seen. Alright guys, I'll wrap that up for today. Again, those of you that are on the trial and not yet on the Facebook group, you've got to click on the link below. Come and be a part of the Facebook group so that I can keep in touch with you during the day, and you can ask me questions. We can look at stocks, and I give you a heads up when I'm about to enter or exit trades. Anyone's got any other questions, or you want to email me, Zach at tradingwithzach.com. I appreciate you being here with me, and I look forward to seeing you guys tomorrow on the chart.